All right. Hola, guys. ¿Qué paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's go ahead and continue our Tracking Bitcoin series. We're going to look at Bitcoin today on the macro and the micro, like what we've been doing for the past few weeks, and we've been tracking its price action. And I just want to kind of show you what I'm looking at. Try to make a very brief video here, and so you can compare your technical analysis with mine, and hopefully I could show you some things that could pique your interest to look deeper into this, into the science of technical analysis of price action. So with Bitcoin, so we have this on the macro here. It's on the 4 hour, and this is the overarching Wyckoff structure. I contend that this is a distribution top. It's a 3 drive. We've gone over this. It's just a quick recap. And so I have all the Wyckoff events here labeled: buying climax, automatic rally, secondary test, sign of weakness in B, up thrust, UTAD, a 3 drive. It's like a textbook 3 drive with the 5 wave. The UTAD would be the 5 wave on the Elliott ending diagonal. We had a retracement, broke structure here. It fell through the anchored VWAP, which is the ice. It fell through the ice, and so I anchored the VWAP to the preliminary supply zone, and there we started a new sort of semi-consolidation range, which we're currently in with the macro trend support line of this diagonal of this 3 drive now flipped, and now it's the macro trend resistance, which we have not been able to prevail through. We've had 3 attempts after the fall through of the ice, 1, 2, and 3, and the third one was this last bull trap that we had, and when we fell back through the ice, where we sit now, bouncing off the supply zone of where the automatic rally or the 4 wave is. So, and we've landed now twice, and this is the third time. So we had the sign of weakness in B. Actually, the automatic rally touched it once, then the sign of weakness in B flashed down to it and wicked it, and then we had 2 that didn't quite make it down. These 2 areas here, you see it on here, and then we had 2 conclusive ones. This one and the last one, where we sit now. We bounced off it. So this is the 1, 2, 3. This is the 4th bounce, and I don't think we're going to hold this very long. I mean, we keep bouncing off it with supply. Now we look at the latter half of this range on the macro, and we see building supply. This is strong distribution at this point. This is a strong signal of distribution. All we see in this range here now, it seems like, let me see if I can get a pen, is supply predominance, and we've seen it since the upthrust area. We've had supply predominance. All of these supply spikes have towered over any of the demand. See, this is demand. We have towering supply, and then here, when we fell through the macro trend support line, we've had nothing but predominating supply. And not only that, the supply is building. The supply is getting greater in intensity. It's not just overtowering the demand. It's actually overtowering and building as the price action goes down. So it's a divergence in supply, which equals strength for the bears. So, and then we come over here on the 30-minute. I think I have this on the no, this is on the 1 hour. Okay. So I thought this was on the 30-minute. We could change it to the 1 hour, to the 30-minute. Let's go ahead and change it here. Okay. And then here we have the, you know what? I'm just going to change it back because I wanted to show you guys something first. So this is this, basically. I've labeled the same so you could see it. Here's that ascending channel, aka rising wedge. I guess if you wanted to, you can make it look like a rising wedge, but it's really a channel with the if it's anything, it's an expanding wedge. And then we had the fall through here. This is where we broke through the ice, and this is the final rejection. This was this right here. And if you've been watching my videos, on the last video I showed you guys what a fractal range looked like, and we had a perfect fractal range of this rejection point, this distribution on the macro trend resistance line. But you got to put it on a lower time frame to see it. So we'll go to the 3-minute, and let's see if we can see any resemblance of it. I went ahead and already labeled it. So Does that look familiar? Yeah, it does, right? So we'll get rid of this circle here. And so we see even like where the price fell through the ice, kind of the same area on this top buying climax, the preliminary supply, automatic rally. All the features are there. They're more or less in the same place. A little bit, different here and there. Like for example, the UT comes up a little bit higher on the macro than on the micro, but essentially they're all there. And then we had this area here, this consolidation here, this three. We had 1, 2, 3 here, 1, 2, 3, and then where these came up and actually touched and bounced off the macro trend resistance line here, say here, and then here after it fell through the ice. These bounced off the ice itself, didn't really touch the macro trend resistance. It's bounced off the anchored VWAP, which is fine. It's the same area. It's the same. It's this kind of gray area here. The important thing is that it distributed from it, and we came down and we talked about fractal range analysis, how you can track this going down. Now again, this is on the 3 minutes, so you're going to see a lot of wild swings and price action here. But I want to focus on where we are now. So we've come out of this descending channel, and we're here. All this is taking place here on this support line where the automatic rally mitigates this last bounce, this fourth bounce that we just had that we talked about right here. So this is where we are right here. And so we want to kind of get a lower time frame. We want to kind of get a telescope as it is, or a microscope, and look at it under there so we can see the intricacies of the price action to kind of determine if we're gonna mark down even further. We're gonna distribute from here after a period of consolidation, and then hit this liquidity void, this preliminary supply zone. And it's important that if we're heading down this way, that's actually good news, because not only do we get cheap Bitcoin, but it also sets the stage, as it were, for the altcoins to rally. And the altcoins really need to rally because a lot of them bled out along with Bitcoin, and they're down. They're like really down. But the good news is with the alts is many of them are in consolidative bullish patterns, just like waiting for Bitcoin to decrease in its dominance so they can go ahead and mark up with their own dominance. So as Bitcoin decreases, altcoin dominance increases, and vice versa. It's always been like that. So we want to look down here and kind of get an idea of what Bitcoin is going to do at this important liquidity zone area. So here, and then since it's on the micro, as it were, and this really is the micro because it's the 3 minute, we're looking at the volume spread analysis is where really that sort of technical analysis begins to shine and take on strength. So here we see it broke out of this descending channel that we were in. See this long channel, which brought us down. That's all this. Brought us down to here, and then we can kind of see what it's doing. We had this rally where it broke, had a change of character, it broke out of the structure, and then right away we see this very large predominating demand spike. Yet we look up in the corresponding price action, we see hardly any movement at all. It's continuing in this wave up, but it's not reflecting the kind of spread that you would expect from this sort of magnitude of demand. So that's actually it's a violation of one of the Wyckoff rules, where I believe it's the second law of Wyckoff, where the effort should equal the result. Okay, and so the effort, of course, is in the volume. The result is in the price action reflected in the candle spread. And so if the candle spread is not jibing along with the volume, then that's a weakness. It's a sign of weakness for whatever the volume is. So if it's supply, it didn't move. You got all this supply, but the price didn't go down. That means that that would be a bearish weakness. And if you see a huge demand spike like this and the price doesn't hardly move, that means that there's little or no value. So all these buy orders are going in, but it's not moving. It's not propelling the price up any more significantly than it did down here with these low demand spikes. And so it came back up here, and then we had a sell-off, And the sell-off, I want you to notice, see, here's the volume spike for the supply on the sell-off, and you see that it kind of equals, you have like equilibrium. This is the effort. It's kind of like a little bit above average effort in the supply volume, and then we have a legit sell-off. So the supply, we kind of have equilibrium in the effort versus result. So again, that's another plus for the bears. It shows that the bears are healthier than the bulls in this area, because the bulls had their turn, but they couldn't drive the price up. We had a failure to rally. And then here, again, we came back up. We weren't able to rally through the ice or through the anchored VWAP. We had a larger than normal demand spike here, and again we came back down and came back to this line here where we had that sell-off before, where we currently hug. We're currently hugging this area. We see the supply volume right here coming up. That's above average, but there's no, it hasn't gone under. So what I see here is perhaps another double bottom on the micro. Maybe this can come up since this supply wasn't able to bring it down under here. We could see another attempt at the anchored VWAP line or the ice. And it's only going to do so many attempts. And if it doesn't prevail through the VWAP, which is around $95,000, then we're going to come back down, and at some point this supply zone is going to is not going to hold, and we're going to go through it. And if we go through it, then we're going to head towards this preliminary supply liquidity void. And if we touch this area, this is the area where I think that Bitcoin will really begin to lose its dominance on the charts and set the stage for the altcoins to rally. We go to the Bitcoin dominance chart and see what's going on. You see Bitcoin dominance, the market cap dominance, it's in a rising wedge, which is bearish, right? So let's see let's go to a 1 hour. Maybe we can get a better. Let's go to a 30-minute. Yeah, that might be better. All right, so this is the Bitcoin dominance chart. It's on it's on a it's in a descending channel. So we've been tracking from its high here where it had peak dominance, and here it's in the overbought area above this descending channel, slightly above the anchored VWAP. But it's in it's the pattern that it's forming atop this macro trend resistance is a distributive pattern. It doesn't look like it's going to rally from here. It looks like it's forming what I call devil horns. Well, in this case, it would be a 3 crown, because you have the 1 up thrust, 2 up thrust, and then the third up thrust, which is looking like a rising wedge. So rising wedges we know are bearish. So what we can kind of anticipate is this coming to the confluence of the wedge, perhaps mitigating the top here of this first up thrust, and then coming back down, and that's what gives it that kind of the devil horn kind of look. And we see that in some of the, you've seen these before. Here's one in the UTAD on the macro on the price chart. It's a very well known pattern. Some people call them double tops or triple tops. See, on the 30-minute, it looks like a triple top, but if you put it on like the 4-hour or something like that, when it's all said and done, it's going to look like a standard double top. The point is, it's distributional, and it's projected to come back down into this channel. Now, again, this is market cap, and if it comes back into this channel, it'll be headed down towards this area here, which is the support zone from where this Elliott wave started. This 1, 2, 3, 4, 5 impulse, and then if we come back down here, maybe we can have an ABC, a macro correction, which would bring us, this zigzag could bring us down to this area here, and to the support line. And if we go under the support line, or even if we rally in this area here, I believe we'll already be seeing a lot of upward momentum with the altcoins by this point. So just remains to be seen what's going to happen. But so far, everything is looking looking bearish still. Looking like yeah, you see. I mean, even if we take away everything, I mean, you know, here we already had the inverted head and shoulders. This is the typical reverse cycle here. Normally the cycle comes, let's see. Oh yeah, if you're right on this, it brings all the lines back. So here, sometimes this second or this third pump can go above the first two, and that's like a UTAD, and then it'll distribute with an ABC, and then we see it coming down the side of the mountain again, and that brings us down into the range. So everything's looking like it could distribute further, and if Bitcoin's not able to hold the this line here, this support line, and it starts making its way back down to this preliminary supply, then we'll see the Bitcoin dominance also fall with it. And so we have correlation in both dominance and in price action, which paves the way for the altcoins to have their to shine, so to speak. We can start swinging altcoins, making a bunch of money, and that'll be good. That'll cheer everyone up. And in the meantime, I believe Bitcoin will be busy consolidating and fixing to put another leg up and to make another all-time high sometime in the spring or summer of this year. So, or maybe even earlier than that. Just depends. But now with all the wildfires and everything in California and such going on, all the things, all the havoc going on right now, I don't know if it's going to affect it somehow, and it'd be like a black swan event, kind of like COVID was. It's funny, it's like every 4 years, it's like, we talked about this in my group, every 4 years it seems, when Bitcoin is topped out, there's something happens. It's like it's just something. It's I don't know, it's coincidental or what. I'm not a conspiracy theorist, but it's just interesting. And I said, I told him, just watch and see. Watch right after Trump comes in or whatever. There's going to be something. It's going to be catastrophic. Something will happen that will affect the markets and cause the recession. There needs to be a recession. I believe it's coming, and I believe that Bitcoin has not taken profit yet on a macro scale. So. But I'm hoping that all that happens, the 70% sell-off or whatever happens after it makes a second all-time high. And like I said, we'll calculate if it pumps back up after it accumulates wherever, either on top of here or above the preliminary supply zone. It reaccumulates and then it pumps up. Once we know where the buying climax is on that, then we can calculate the Fibonacci extensions and kind of get an idea of how high we can expect Bitcoin to go before the macro sell-offs. And then after that, I think that's it. We're going down to take serious profit. And so we haven't seen anything yet, but this is just one of those intermediate distributions before a second top goes up. That's what I think. Those are my 2 cents. And so you're free to agree, disagree, leave a comment, let me know what you think. Subscribe if you get anything out of these videos. And yeah, check out our trading group if you'd like to learn, if you'd like to take your chart reading skills up another notch and talk to a bunch of traders who are also, we have similar interests. We love price action. We love tracking Bitcoin and some of the alts. We have guys in there that like Cardano, and then others who like Solana and AVAX and all that. We track all those blue chippers, and we like talking about them. So it's just a good community. I try to keep it affordable, $20 a month. It's been $20 a month since 2021, and then when alt season comes around, you get all my alt picks and my entries and exits, and you get to kind of piggyback, as it were, my trades and make the kind of percentages I make, which can be quite juicy and safe. That's the thing. I like to be safe in the market. So if you like being safe in the markets, subscribe to this channel, and I'll keep you safe with the price action. We track the price action assiduously, diligently, meticulously. I try to track Bitcoin and the dominance charts. So if this is your cup of tea, then by all means, at least subscribe so that way you don't miss any more updates. All right, guys, that's enough from me. I'm gonna go drink some more tea because I don't feel good. I'll talk to you guys soon. And until then, please be safe in the markets and stay warm if you're in a cold area. All right. Adios. Bye-bye.